Hello everybody and welcome to Hawkeyefx with your host Marcus Toombs on the 31st of July 2017, and this is my weekly review. Okay, let's look at last week, and this was the line here for last week. We had discussed that the Aussie was looking like it was going to turn over, so we were going to look for some weakness in the Aussie if it turned over. We were looking for continued Japanese strength, continued Euro strength here as it had turned up very strongly, and also the New Zealand was strengthening. Against this, we were looking for Canadian weakness to continue, pound weakness to continue, and the US dollar weakness to continue, but that was also qualified with it might turn and come into strength, having been so low now in our charts. Okay, before we look at the charts, let's just see what the news is coming out this week, and this is just a tier 1 data news, so we can start off on Tuesday. This is the manufacturing PMI day. We have it out of China, and we have it out of Germany, the UK and the US, and these can all affect those particular currencies. The big one here is the interest rate decision out of Australia, and expected to keep rates on hold, but watch for rhetoric to say that the value of their currency is currently overvalued, trying to jawbone the currency a little bit. On Wednesday we have construction PMI out of the UK, which can move the market, and of course ADP non-farm employment from the US. Thursday and Friday are our biggest days of the week. On Thursday for the pound we have services PMI in the morning, followed by the all-important interest rate decision at 12 noon. And then on Friday we have some retail sales out of Australia, and then the big one is non-farm payroll for the US dollar on Friday, with unemployment rate and the unemployment change from Canada. Now the non-farm payroll has been a bit quiet of recent months, because this figure is not quite so important to the overall monetary policy. They're looking more at PCE and for inflation. Okay, let's start off with the US dollar, because that has weakened, taking out multi-year highs or lows in the currencies you can see here in the yellow line against New Zealand, Aussie, Canada and the Euro, and that was part of an earlier podcast I did last week. You can see here now the US dollar has kind of starting to bottom out. We're looking for some head and shoulder patterns perhaps in the recent days of trade, and it's looking like this US dollar might now come into some strength here, and we will look to the non-farm payroll on Friday for further direction. Looking at the pound here, that was meant to weaken through here, but you can see it was quite of a changing week here, and it started to come into some strength. So here's the pound on the 240 charts, and you can see pretty much horizontal here. We were weakening into the beginning of last week, and then we've gone horizontal, and this looks like it's turning now to come into some strength. The euro here did turn up and strengthen here, as we can see, and if we look at the charts you can see it continued to strengthen against most of its compatriots, although not as steeply or as dynamically as in the last couple of months. This was a similar story with the yen. You can see here we're expecting the yen strength to continue, but it started to turn here and some weakness started to come into the currency. Okay, then going forward this week we're looking for continued euro strength and yen strength if these don't turn down. We'll be looking for the pound now to come into real strength as it gets above the halfway, and the US dollar will be monitoring to see if it does come into some strength, even if it's a pullback on a weakening cycle. Against that we look for Aussie weakness and Canadian weakness to continue. Okay, I hope it helps, gives you an insight to the week coming ahead, and I wish you all the best for your trading.